Good morning, everyone. This is Clay Chase. Actually, good afternoon, everyone, where you are. This is Clay Chase with Torrey Hills Capital. Welcome to Taseko Mines Non-Deal Roadshow virtual presentation for September 6th, 2023. You just heard us talking about our weather. I hope you're having some decent weather back there and it's not too hot, and that everyone's okay from the recent tropical storms, hurricanes out there. Now, the company we have on today, I know many of you are familiar with them. It's a great time for an update. They just had a significant news release about a week ago, and we'll talk about that. They're making some significant progress towards a major permit for one of their projects. If you've been watching Taseko, you've probably been watching the copper market, and that's been a pretty active market over the last, say, 24, 36 months. Currently, copper is around $3.75 a pound, which is a really good price from where it was around $2 and change just, say, 3 years ago. But a lot of the analysts are expecting copper to become even more active over the next 3, 5, 10 years, primarily due to the demand that is really ramped up for copper, all things copper, to supply the ongoing electrification of the transportation industry. You're seeing a lot of these electric vehicles come on the market, and you're seeing a lot of the charging stations come on board that require a tremendous amount of copper, as well as all the infrastructure to drive electricity to all of those devices. So we're seeing a big demand for copper. At the same time, we're seeing a bit of a slack in the supply side. A lot of the major mines that have been pumping out copper for decades are starting to move into their twilight years. And right now we're kind of in that Goldilocks situation where copper is not expensive enough to warrant the turning on or the ramping up of major large projects, but it's still a very good price for those who are producing copper. If you have a question during today's presentation, just ring in with your Q&A icon on your taskbar. You can raise your hand, or you can hit the chat icon and we can get your question asked right during the presentation. Also, post-presentation, we'll send you a brief survey. If you can get that back to us quickly, that'd be great, because we can get that back to the company. Okay, now, for those of you who know, Taseko Mines is a mid-tier copper producer. Primary operations are in British Columbia, Canada. Their flagship project is called Gibraltar. It's Canada's second largest open pit copper mine. You also have other projects that are getting ready to turn on. That's their Florence project in Arizona. And that's a different kind of copper production. You're going to learn more about that if you're not familiar with it. It's called in situ processing. It's very economic. It's very ecologically friendly, and has very low impact to the surrounding area. In addition to the two major copper projects, Taseko has a strong portfolio of additional, both copper and gold projects. And if we have time today, we'll talk a bit about those. Taseko trades on the NYSE. The ticker is TGB. On the TSX main board is TKO, currently trading about $1.36 US. Market cap around $544 million. With us today to discuss Taseko's operations is the company's VP of Investor Relations, Mr. Brian Bourgault. Hi, Brian. How are you?
I'm good, Clay. Thanks very much. Good to be here.
Great. Well, great to have you on the program today. I'm going to go ahead and stop sharing and allow you to share your screen, and then you can get your presentation up here, and then we'll looking forward to the presentation. Okay, that should allow you to put yours up now.
Good.
That looks great.
Excellent. Well, thanks everyone for taking the time out of your busy days to join us here this afternoon, this morning where I am on the West Coast. Thanks for the introduction, Clay, and I'll jump right in. Like Clay said, if any questions come up as we're going through the presentation, don't hesitate to ask as we go. Hopefully, I'll give you a good overview of who Taseko is and our key assets. And I think it's a pretty exciting time for the company. We've got a lot of near-term catalysts, positive catalysts here over the next few months. So yeah, it's a very exciting time. So who is Taseko? So our main producing asset today is our Gibraltar mine. It's the second largest open pit copper mine in Canada. only second to Teck's Highland Valley Copper Mine, which is just down the road from us. Long life asset with 22 years of mine life ahead of it. It's been in production since the 70s, so it's a mature asset. We've been running at steady state really well. We restarted it in 2004. We did a whole bunch of expansion, modernization, and then we've been operating steady state at the higher level since 2014. So it's been our cornerstone cash generating asset. We've taken all the cash we've generated from Gibraltar, and we're not only invested it back into Gibraltar, but our other pipeline of projects as well. So next would be our Florence Copper Project. This is down in Arizona, just about an hour out of Phoenix. We are waiting one final permit from the US EPA, and then we are ready to start construction. I will talk a little bit about the permitting progress we've made. We had some news last week, which was an important step towards achieving that final permit. So we'll get into some more details on that shortly. But Florence will be totally transforms Taseko, gives us a second operating asset. It almost doubles our copper production, and it more than doubles our cash flow because of its low cost structure. So a very important asset to us. And like I say, we've got all the long lead items procured. We spent about $19 million now on the long lead items. So as soon as we get that final permit, we're ready to move into construction. Very strong emphasis on ESG here. Employee safety and the environment are critical. If you don't have a good track record in those areas, you don't have a long-term business. So big focus on that, right from our president and CEO, right down to all of our workers at Gibraltar and everyone else. All of our assets most of our assets are focused in copper. We believe it is a critical metal that the world needs more of as we transition to net zero. And we'll talk a little bit about the fundamentals, but they are stronger now than they've ever been. And like Clay said, the price of copper today is $3.75, $3.80, and it seems to have formed a base at this level for the last year or so. And if the next bull run starts from here, then who knows how high the copper price can get. We've got the management team in place to build Taseko into a multi-asset company. All of us at the senior level. I've been here 18 years now. We have one other fellow who's been here longer than me, but we've all been here a long time. All have a lot of experience in the mining sector. As you can see, all of our assets are in North America, specifically BC and Arizona. We like these jurisdictions. We like North America. We have rule of law. Yes, permitting can be challenging, but once you get those permits, then you don't have to worry about the government stealing your assets or other issues like that. So we like North America. Unlikely you'll see us chasing after assets in South America or Africa. I'd say extremely unlikely. And we have a great pipeline of projects. Beyond Gibraltar and Florence, we also have our Yellowhead and New Prosperity copper projects. They're both advanced stage, but they would fall in behind Florence in terms of development timelines. They are longer dated. And then we have Ali in northern BC. It's a niobium project. We haven't done a lot of work on Ali in the last few years. We've got a pre-feasibility study out on it. But what's changed there is we're seeing a lot of work being done as niobium is a battery metal. Traditionally, niobium is used in high-strength low-alloy steels, so in the steel sector. But there's a lot of R&D being spent on niobium as a battery metal. So we're watching that and seeing how that plays out over the next little while. So that's Taseko. A few things on our capital structure. The way our share price has been moving lately, this is already out of date, even from a couple days ago. We're trading about $1.35 US today, so about a $400 million US market cap. As Clay mentioned, we are listed on the NYSE, also on the TSX and in London. We had at the end of Q2, $86 million Canadian cash on hand. And sorry, I am going to go back and forth between US and Canadian dollars. I'll try and clarify whenever I use these dollars. But Canadian dollars on hand at the end of the quarter was 86 million. And we also have a US $80 million revolving credit facility. We do have some debt on our balance sheet. We've got a $400 million US high yield note. This was a refinancing we did in 2021. It's a 5-year note, which expires comes due in 2026 and pays a 7% coupon. It does trade, and today it's trading about 93 cents on the dollar. So about a 10% effective yield. We're covered from an analyst perspective by most of the standard Canadian banks and brokerage firms, and also Canaccord and Stifel, two banks with large US presence. Most of the banks brokers have a buy on us and fairly good returns to target. In terms of our shareholders, we are widely held. As you can see, board and management would be one of the largest at 3.5% combined. iShares Infrastructure ETF, that's a US ETF. It's also has a big position. And then Global X, the other big copper ETF, is also about 2%. But as you can see, we have no controlling shareholders. We do have one other holder who's not a filer, who's at about 8%. But other than that, we are just we're widely held. So we're probably today about 35% institutionally held. The balance would be retail. So a little bit about copper. It's been a volatile couple of years in the copper sector, really starting from the beginning of COVID in 2020, when the price dropped from about $3 per pound down to $2 per pound, or just a little above $2. But the price came back very quickly and very strong, got up almost to $5, actually just touched $5 back in 2022. And it's come off since then, and it's been trading in this sort of $3.70 to $4 range for the last year and a half. People go, oh, the price of copper is low, it's tough times. Well, if you look at that graph there, you don't have to go back very long to see that, $2 to $3 was where copper typically traded, and $3 was a fantastic price. Now people are pulling their hair out at $3.75. The reality is $3.75 is a fantastic price. Yes, operating costs have gone up, capital costs have gone up, but most producers are generating strong cash flow at today's price. And as I mentioned, if this is, we formed a new base here, and when the copper price starts to move and we head towards the next peak, who knows where that peak can be? The volatility has been driven mainly by concerns about the global economy, and more specifically China. But the fundamentals, that affects the short term. But the fundamentals for the medium term and long term are exceptionally strong today. We're seeing estimates that basically demand for copper needs to almost double in order for the world to achieve its net zero goals. Copper is such a critical metal as the world transitions and decarbonizes. And the question is, where's that copper going to come from? In the last year, there's been 2 large mines start up. That's QB2 in Chile and Quellaveco in Peru. These are both going to produce about 200,000 tons of copper per year in a 25 million ton market. So significant production. And that copper has been absorbed into the market. The question is, how are we going to keep up with demand? And what we know today is it takes upwards of 20 years to build a new copper mine of any scale. So we can look out for 5 to 10 years with good certainty, knowing what can come online in terms of new copper. And those projects aren't there to keep anywhere keep up with demand growth. And that's really the crux of the issue. Demand will grow. We know that. It's just how the industry is going to keep up with it. S&P did a large study a little over a year ago, and they estimate that demand will grow to 50 million tons from 25 for the world to achieve its emissions goals. Again, where's that copper going to come from? And the thing about copper pricing is it's very elastic. The price of copper goes to $6 or $7, adds $100 to a price of a car, that can be passed along. Adds $1,000 or $2,000 to a price of a house, that can be passed along. So there really is no ceiling or any limit as to how high copper can go. So it's why we've positioned ourselves in copper. We are very bullish about the future. A lot of people talk about the EVs and its impact on copper. Yeah, electric vehicles take roughly 4 times as much copper as a conventional car today. And I know in Vancouver, it's like every 6th car is a Tesla. But it's not even the cars that's going to really increase demand. It's the infrastructure needed to charge these cars. Everyone who has an EV wants to have a rapid charger at home. Every new condo, at least here, has got 15 or 20 stalls for rapid charging. Every hotel, across the board. And all that infrastructure needs large amounts of copper. So, yeah, we are very bullish. Who knows how high copper can go to in the future, but we think, it's starting from a very strong position today. So a little bit more about Taseko's assets. I'll start with Gibraltar. Again, Gibraltar's our producing mine. This is a picture down in the bottom of the granite pit, actually. We've actually moved out of this pit now. We've moved into a new pit, the Gibraltar pit, but it gives you an idea of the scale. That's a bus down there behind that haul truck. Gibraltar's a very large open pit operation. As I mentioned, it's the 2nd largest open pit copper mine in Canada and 4th largest in North America. On average, for the rest of its 22 years, it will produce 130 million pounds of copper per year. We own 87.5% of Gibraltar, so to our accounts, about 115 million pounds of copper. Life of mine cash costs are about $2.10 per pound. We have been running higher than that. That's mainly a result of diesel costs. We burn a lot of diesel in our haul trucks, and diesel's been, in 2022 it was quite high. It's come off a bit, but it's gone up again in price. So it's probably added 20 cents per pound to our cost structure. There's a few other things like steel, reagents that are a little bit higher, but really the main thing driving our higher costs is diesel. So 22 years of mine life ahead, and still lots of exploration potential here. So we actually bought Gibraltar in 1999 for $1. The previous owners had just shut it down. At that point, it had been operating for 30 some odd years. It was a tired, worn out mine. We bought it thinking at some point the price of copper would climb up from the 60 to 80 cent level. We might be able to fire it up and generate some cash. And in 2004, that's what we did. On a shoestring budget, we fired it up, thinking, this is when the price of copper went over $1 per pound. And the thought was price of copper would stay above $1 for a year or two. We could generate some cash, and then when the price of copper cycled back down, we would mothball it. Well, the price of copper never did cycle back down. In 2006, we started investing here. We saw the long-term potential of Gibraltar, but it needed some capital, needed to be modernized, and it needed to be expanded. So between 2006 and 2013, we invested $800 million. We took it from a milling capacity of about 30,000 tons per day to what it is today, 85,000 tons per day. You can see that picture there, the gray building in the middle, that was the original concentrator. All the blue buildings is all the new infrastructure we built. We also replaced our entire mining fleet. Today, I think we've got 27, 28 haul trucks and 4 very large shovels. So that, over that period of time, we invested that $800 million. We operated through that whole time. And so we took all the cash we were generating, put it back into the mine. We also sold 25% of this asset to a Japanese consortium back in 2010, and that was for almost $200 million. And then our first high yield note was in 2011. That was at $200 million, and that is what funded the final phase of the expansion. As I mentioned, today we own 87.5% of Gibraltar. Just earlier this year, we bought out one of our partners who owned 12.5%. So yeah, Gibraltar today still has a $1.3 billion after-tax NPV. So a very good asset. Like I say, it's been the cornerstone asset for us, a steady state producer, and we've taken the cash we're generating here and reinvesting it back in the business. When you look at the production graph there, you can see production's been lower the last couple of years, below the life of mine average grade. And we knew that. We knew we'd be cycling through some lower grade areas for a couple of years. This year, we'll see a rebound in that copper production, trending back towards the life of mine average. So our guidance this year was 115 million pounds of copper production, compared to 130 million pounds. So we're still not back to that life of mine average, but we're getting there. And in our Q2 conference call and earnings, we reaffirmed that 115 million pounds. We have a very good safety track record at Gibraltar. We've won the Safest Mine Award 6 out of the last 8 years, and we've won many environmentals and tailings awards as well. Gibraltar's got a huge amount of leverage to the price of copper. In the first half of this year, we've generated EBITDA of nearly $60 million from 53 million pounds of sales. Last year, we did 110 million of adjusted EBITDA, and the year before we did 230. So I think in the back half of this year, we have higher copper production. As long as the price of copper holds in, we should see a much stronger back half of the year from a financial perspective. We do not hedge our production, but one of the things we do at Gibraltar is we buy out of the money put options to protect a minimum price. So we are protected at a minimum price of $3.75 per pound for the balance of this year for most of our production. We've had this hedging policy in place for over 10 years. So yeah, if the price averages less than $3.75 for any month for the balance of this year, then that derivative will pay us. And we think it's a prudent thing to do. It protects the cost structure, and at $3.75, we know Gibraltar's costs are protected. Plus, we can pay our annual interest on our bonds and our corporate G&A. So yeah, it's been a prudent thing for us to do. I'm sorry, I'm having a bit of a problem with my computer. Hey, Clay.
Yes, Brian.
Which slide do you see up right now?
The cash flow growth from stable mining operation. There's a graph on the upper right and the lower left. Now I see the pathway to low-cost Florence.
Okay, sorry about that. I'm not sure. I was having a little bit of a computer glitch there.
All set.
Okay, so that's Gibraltar. That's our cash flowing asset today. So let's talk about where the real excitement is going to come from for Taseko, and that's Florence. Florence is down in Arizona, about an hour out of Phoenix on the way to Tucson, near the town of Florence. When in production, Florence will produce 85 million pounds of copper per year. We own 100% of this project. and it will produce copper for about $1.10 per pound. So Gibraltar's at today is 230, 240 per pound. So Florence at $1.10 is less than half of what Gibraltar is. So exceptionally low cost production. The mine life here will be 22 years. And we're going to produce a copper cathode, 99.99% pure copper cathode. We are going to use a different process to extract the copper. This won't be an open pit. It won't be an underground. We're going to use solution mining. And we'll talk a little bit about that, but that's the reason why the upfront capital is very low and our operating costs. So we just updated our feasibility study earlier this year, back in March, and all the new economics with new costing for capital costs, new operating costs. We have, as of March, we had 230 million left to spend on the upfront capital. But this project's got a nearly $1 billion US after-tax NPV, using 375 per pound copper. This is a fantastic project, and as I mentioned earlier, it will completely transform Taseko. Gives us a second operating asset. It's much lower cost, so it brings down our consolidated cost structure. And it's in Arizona, a very good mining jurisdiction. So, we bought this project in 2014. We've been working away on it, on permitting, on technical work, and we are very close to starting construction here. So solution mining, or otherwise known as in situ copper recovery, what we're going to do is we're going to drill a well field. These wells are drilled down into the deposit, and then we inject a solution into an injection well. As that solution migrates through the deposit, it leaches out the copper. So we're doing this with in situ, or in place. We're not digging a big hole. We need no fleet of haul trucks. We inject this solution. That solution leaches out the copper. Then we recover that solution. And then we produce pure copper cathode in a standard conventional SX-EW plant. There are many environmental benefits to this process. Because we're not digging a big hole, because we don't have a haul truck fleet, relative to an open pit copper mine, our freshwater use is 78% less, energy consumption 65% less, and carbon emissions are 70% less than a conventional mine. We're not digging a big hole, so there's no permanent change to the landscape. We're not blasting, so there's very little dust. When we're done here in 25 years, this site could be turned into a residential area, a golf course, you name it. This is such a great project from an environmental standpoint. And it's also why it is very low cost. So where are we? So as I mentioned, we bought this in 2014. We made a decision because this in situ process has not been commonly used for copper production. It's commonly used in uranium. About 40% of global uranium production uses in situ leaching, but it hasn't been used for copper. And that's mainly because copper is typically found in hard rock, like at Gibraltar, where we need to blast it, crush it, grind it, that rock, to get that copper away. Here, Mother Nature's done all that work for us. So we have an opportunity to use in situ mining here. But because it hasn't been used commonly for copper, we made the decision to build a test facility. So we spent $25 million in 2018. And leading up to that, we had a few years of permitting to get the necessary permits to build and operate this facility. We got those permits. So we built that test facility in 2018. And then we operated it for 18 months and produced about 1 million pounds of copper. That test facility included 4 injection wells and 9 recovery wells, and then groundwater monitoring wells as well. So we produced 1 million pounds of copper, and we proved the 2 key things with the test facility. One, we proved to the regulators that we can operate this process and protect the environment. We can control the solutions 800 feet, 1,000 feet under surface. We had very strict guidelines in our permits, and we operated within those with no permit exceedances and no issues. So we proved that. And from a technical perspective, we proved that this process will work at Florence. Many of the modeling assumptions we had in our technical reports were proven out. And yeah, we used this 18 months to learn how to ramp it up, how to operate and control these solutions. So it was very much a success. So once we finished the production phase of the test facility, we had to amend the 2 key permits needed for commercial production. So the 2 key permits, one comes from the state, that's the Aquifer Protection Permit, and one comes from the EPA, that's the Underground Injection Control Permit. So the state started their process in 2020, and in December of 2020, the state issued us our final permit. So we've got one of our 2 key permits. The EPA started their process in 2021, and where we're at right now, or in August of last year, of 2022, the EPA issued a draft permit, and that went for public comment period. There was a 45-day public comment period with a public hearing. During that time, we received overwhelming support from the local community, from elected politicians, and the business community as well. I think 97% of the written submissions were in favor of the project moving forward. And at the public hearing, everyone who spoke was in favor of the project moving forward. So that was last August and September. After that, the EPA then needed to respond to comments that were received. So they've been doing that now for the last, well, since last August, so for about a year now, not quite a year. And we believe, based on our discussions with them, that that part of the process is effectively finished. Last week, the EPA informed us that a programmatic agreement, and this is an agreement that states how we will treat cultural artifacts, any cultural artifacts that we were to find on our property, on the Florence site, how we treat them and how they're managed. And that programmatic agreement has been out with a number of parties for comment, and it went out for signature to the 3 key signatories, and that final party signed it last week. So the programmatic agreement is now in place. And the EPA, what we know is the EPA cannot issue the underground injection control permit until the programmatic agreement is done. So the programmatic agreement is now done. So the path is cleared for the EPA to issue the UIC. Now, we don't know the timing of when they're going to issue the UIC, but as far as we know, and again, based on our discussions with the EPA, it should be, we expect this here in the next few weeks. There's no commitment from the EPA when they're going to issue the UIC, but we believe it is imminent. So that is a huge catalyst for this project. A lot of people back in 2014, when we bought Florence, said you'll never be able to permit this project. We permitted the test facility, we operated the test facility, showed that this process will work, and we are now in the very final part of this process. And we're extremely confident that the final UIC will be issued here in the coming weeks. So as I mentioned,
yeah, we've got a question from the field here. Let me go over there and enable their microphone. Hang on just a sec. Sorry, having a little trouble finding it. Here we go. Chesley, if you want to ask your question, go ahead.
Okay. Let's see. Can you hear me?
Yes, I can.
Yes, you can.
Okay. I think you're spot on with regard to your projections for copper, and I'm particularly excited with the in situ recovery. But there is a neighbor in your area that the Gunnison mine that's run into a number of issues with their in situ recovery, and I wonder if you could do a quick compare and contrast.
Sure. Yeah, that's a very good question, one we get a few times. And just so everyone has a little bit of background, the Gunnison project is not that far from us. It's owned by Excelsior Mining. They attempted to do an in situ project as well. They were ahead of us, and it hasn't gone so well. So what I can tell you is a couple things. The projects are extremely different, both from a geologic perspective. Their project, their deposit is a skarn. Skarns are very complex metallurgy and mineralization. Ours is a porphyry type, so much more straightforward mineralization. The grade is much more evenly distributed. And so that's one thing. The other, which is critical for in situ mining, is it has to be a saturated deposit. When you're injecting those solutions, you need the deposit to be saturated, which carries that solution through. Our understanding is that Gunnison was only partially saturated. So the deposits themselves are very different. We also have a different well field design. Our wells they're triple encased down into the deposit. So we have steel pipe and then cement and then PVC. That inner casing, the PVC, goes all the way down to the bottom of the deposit. So the deposit starts around 450 feet below surface and goes down to about 1,000 feet. So that inner casing extends all the way down to the bottom. And that allows us to use packers. So we can use packers to isolate different zones and inject those solutions into certain zones we want to leach the copper from. At Excelsior, they only encase their wells just into the deposit, and then the rest is open. So they had no ability to isolate or to target different zones. So the issue they had was CO2, and the CO2 was causing issues with their screens. And the only way they could resolve that is flushing with vast amounts of water, and it's not feasible to use that amount of water. So we operated, and this goes back to the final difference is the approach. They went straight into commercial production. They spent all their money, went into commercial production, then realized that they couldn't get it to leach properly. We spent the $25 million in 18 months of the test facility to learn how to do this and to ensure that it will work. And because of the difference in mineralogy, we did not have any issues with CO2. So the issues they've had, we've shown will not be a factor at Florence. So it's both from the deposit, it's the approach, and it's also the wellfield technology.
That's enlightening and good to hear from your standpoint. Late in their permitting process, they ran into some environmental issues that were just sort of fabricated, dark sky objections and such. Are you past the point where that could happen to you, or could you enter into a stage of delay because of a last minute environmental objection?
Yeah, good question. So as I mentioned, there's two permits that we need. One comes from the state. We've got that one. That was final as of December of 2020. It cannot be challenged. Excuse me. With the EPA's permit, the UIC, we had the public comment period last August, September. As I mentioned, most comments received, like 97% of the comments received were in favor. There's a few that raised some questions. So now the EPA they will be responding to those comments. And basically they'll respond to the comments at the same time as they make the permit decision and issue, and what we assume will be issuing the final permit. There will be a period of time after they issue the final, the EPA issues the final, that a challenge could be made. Now, at this point, we know of nobody who may raise that challenge. We know it's only people who are participated in the public comment period that can raise a challenge. So some party cannot come out of the woodwork today and challenge the permit. So we're down to a very narrow set of things that could cause any delays. But yeah, there is a period, and we believe it will be somewhere between 30 and 45 days where a challenge could be, or an appeal could be met or sent in.
So you feel like prior to the end of the year, you'll have a total understanding of where you stand on that permitting process?
I would say that would be a conservative estimate. Yeah.
Okay, great. Thank you for your detailed answers.
Thanks for the questions.
Thanks, Chesley.
So in terms of financing the final $230 million, and don't forget the $230 million is a number, a capital cost estimate that we came up with earlier this year. So it's a very new number. We feel very comfortable that we'll be able to stick with no cost overruns to this number. We've gone through obviously a period of high inflation, but the timing of when this project was costed was sort of past peak inflation. Some things were starting to come down. A lot of things were leveling off. So we feel very comfortable with the $230 million. So how are we going to fund that $230 million? Late last year, we announced a partnership with Mitsui, where Mitsui will contribute $50 million. And sorry, okay, just clarify. All these dollar amounts will be in US dollars now. So Mitsui will contribute $50 million towards the construction cost of the $230 million. For that, they get a stream, 2.7% or 2.5% copper stream, and 81% of the offtake. They'll get to buy 81% of the copper from us. They also have an option to invest a further $50 million for a total of $100 million, and that copper stream converts to a 10% equity interest in the project. So, but from Mitsui will be $50 million available to us for construction financing. We also did a equipment leasing facility with Bank of America. And just to clarify, we have not drawn down any of these funds. So these funds are available to us when we get the final permits. So 50 from Mitsui, $25 million from Bank of America. So that's 75 million of the $230 million. We also have cash on hand and cash flow from Gibraltar. Obviously, cash flow from Gibraltar is a little bit unknown because we don't know what the price of copper is going to be over the next 12 to 18 months when we're going to need these funds. But we expect Gibraltar will be able to contribute something towards Florence Capital. As I mentioned, we also have a corporate revolver of $80 million. So these are different areas that we can access cash. The other thing we are working on is we are in discussions with a number of parties on a small project loan and or a royalty on the copper. Either of these project level financings could be in the $50 to $100 million range. And we're quite advanced on these discussions. We've made good progress. And the expectation is we should have something more to say on one or both of those in a timeline in line with the granting of the final permit. So in the coming weeks. And then finally, we announced back in May an ATM at the market financing or at the market facility. This facility gives Taseko the ability to sell shares from Treasury. So it's an equity type financing, but we can sell shares from our Treasury into the market to raise capital. Now, we announced this in May, and that's a $50 million ATM, $50 million US ATM facility, and we have not done anything in that facility since then. So we have not issued any shares at this point. So between the firm money that we've got from Mitsui and Bank of America, our corporate revolver, cash flow, we're very close to having what we need. And we're confident we'll be able to close on one or two of these other project level financing. So we're almost there. I think, we'll have more to say on that in the coming weeks, right about the time, hopefully, we get the final permit. As I mentioned, we've already spent about 90 million on long lead items. These are our laydown areas at Florence. So, we've got all the long lead items in place or en route. So we get that permit tomorrow. We've already hired our general contractor down in Arizona. We will get them starting to mobilize construction, and so we should start construction within a couple of months of getting that final permit. It's an 18-month construction schedule, and that's really from board approval to first copper production. It's in Arizona. We don't have a construction window in terms of weather. It's not like we're building a project up in the BC mountains here. So it's a very straightforward construction schedule. So we should see copper production sometime Q1, Q2, 2025, which isn't that far off. So that's Florence. I know we are getting close to the end, but I'll touch on Yellowhead and Prosperity. So Yellowhead is in BC. It's just a couple hours from our Gibraltar mine. We bought Yellowhead in 2019 for $13 million. This, when this becomes a mine, it will be similar size or similar scale to Gibraltar, but it is higher grade. So it'll produce 180 million pounds of copper per year over 25 years. There's also some gold, 500,000 ounces of gold there, and 20 million ounces of silver. So we get a nice byproduct credit, which helps the costs. But obviously, a project like this, and it will be open pit, also comes with a higher price tag. In 2020, when we redid the feasibility study, the capital cost was estimated at 1.3 billion. It would obviously be higher than that today, just given the inflation we've been through in the last couple of years. But it's a great project. But we have probably 4 years of environmental assessment work ahead of us. So it wouldn't be construction ready until 2027. But that timing could work very well. If we get Florence up and running in 2025, have a year or two to ramp it up, get it to full scale, and have it generating the type of cash we think it will generate, then we'll be in a much different position how we could maybe finance a Yellowhead copper project. But this is a type of project we would look to probably JV with somebody because of its upfront capital. This would be a big project to take on ourselves. But it's a great project in a great location, and we don't have to spend a lot of money on it over the next few years to continue to move it forward. New Prosperity, for anyone who's followed Taseko or knows Taseko from history, this was the original project in Taseko back from the 90s. This is one of the top undeveloped gold copper projects in the world. There's about 13 million ounces of gold in resources here, 5.5 billion pounds of copper. In the reserves alone, there's 8 million ounces of recoverable, or almost 8 million ounces of recoverable gold and 3.5 billion pounds of recoverable copper. This is a fantastic project. but it's been stuck in permitting legal challenges for quite a few years now. What's changed here is the provincial government, the BC government wants this project built. They see all the tax revenues that this would generate for the local government. So the local government the provincial government brought us together with the First Nations group in this area, and they've been facilitating a dialogue for the last few years. And we're trying to find a long-term path or a path forward for this project, one that everyone is happy with. Can't say much about those discussions, but I can say they are occurring on a regular basis. And we have made good progress, and we continue to sit at the table and work with both the government and this First Nations group up there. I don't think we would have continued on with these discussions for a few years if we didn't think there was a resolution and that we could find a path forward for this project. So it's about all I can say. It's a great project. It's extremely valuable. Today, it would have a $3 to $4 billion MPV using long-term copper and gold prices. So it's too valuable to walk away from or to give up on. So we'll keep at it, and hopefully we have more to say towards the end of the year. So just
Brian, we have a couple.
Yeah.
We have a couple questions, and one of them is kind of where you're at right now. And I'll read the question, and you kind of already answered it, but maybe you make a final comment on it. This question comes from Dr. James Woods. Hi, Dr. Woods. How are you? Back in the 1990s at the Atlanta Investment Conference, the late Robert Hunter and then CEO Ron Tyson were very bullish on the new Prosperity Gold project, yet still it's not permitted. Realistically, can you get it permitted near term? And I think the near term is maybe the real question mark there. Any comments? I know you kind of really talked a bit about that already.
What year was that he saw Bob and Ron?
The 1990s.
Yeah. Okay, so that's the 90s. That's when they were drilling this out. That's when they had realized what they had here and the size of the deposit. Some work was done, or they were working on the permitting in the late 90s, but the price of copper and the price of gold weren't moving forward. We dusted off all those reports in 2006, and we got to work on this again. We got turned down by the federal government in 2011 and 2012. A lot of the issues were surrounding First Nations and the fact that they were not supportive of the project. Here in BC and most other places in North America now, you need to have the support of First Nations to move projects like this forward. So can we get it permitted? Well, that's what we're at the table discussing. As I mentioned, we are at the table with the First Nations group from this area. These discussions are being facilitated by the provincial government. And all I can say is we wouldn't have spent this much time if we didn't think we were going to come up with a positive outcome. So we continue to meet on a regular basis, and I can say that progress has been made. So, you can read between the lines. The discussions are confidential, so we are really restricted in what we can say. But again, we wouldn't be wasting our time if we didn't think there was a path forward for the project.
Great. And then Dr. Wood has another question, which is going to lead us probably into the closing slide, but I'll go ahead and read the question because it's a great question. So adding the Gibraltar NAV of 1.3 billion and the Florence NAV of 930 million, Taseko Mines is about 2.3 billion, yet your market cap is only 400 something million US dollars, carrying your $40 million long-term debt. Please discuss potential market cap when Florence is in production. Very good question, because that's where the rubber is going to meet the road here. Is if they get Florence up and running, what's the company worth? And I think you've got a great slide to talk about that. Thank you, Dr. Wood, for that great question. And we'll go ahead and let Brian answer that here.
Geez, almost like I've paid him to set me up here.
I don't.
It's a great question.
I promise there's nothing going on here. I promise.
And this is the final slide, and this is what I'll leave everyone with. And just to reiterate what Dr. Wood said, Gibraltar today is $1.3 billion. This is Canadian dollars. $1.3 billion of NPV. In Canadian dollar terms, Florence NPV today is 1.2 billion. You take away about $500 million of net debt, leaves an equity value of about $2 billion relative to our $500 million market cap in Canadian dollar terms. So there's a huge valuation gap, and we believe that mainly has to do with Florence. So how do we close that valuation gap? As I mentioned, there's always been a doubt whether or not we could get Florence permitted. And I think that is the biggest discount on the value of that project today. And we are, as we've gone over, we are right at the very end of that process. I'm not going to say it's a rubber stamp. I'm not going to say it's an automatic, but it's hard to believe that the EPA would have gone through everything they've gone through, got the programmatic agreement signed here in the last week, if they weren't planning on making a favorable permit decision. So I think we get the EPA's permit. That's a huge step towards unlocking some of that value. So yeah, that's what we're trying to do. We're trying to close that valuation gap. Now, obviously, getting that permit's not going to add $1.5 billion to our market cap. It would be great if it did, but I think it's the start of the re-rate. And then obviously, I think, closing one or two of those financing transactions to show that this project is fully financed is another step. And then obviously we need to build it, and then we need to make it work. But we have a very good track record, our management team. You look what we've done at Gibraltar, the $800 million of expansion we did there. The same guy who managed and led that whole capital program at Gibraltar, he's the one managing the Florence construction. We get the permit, then the fate of this project's in our hands. And I have 100% confidence that we can execute and build it on time, on budget, and then make it work. So it's going to take some time for that re-rate to fully happen. But, there's just such a huge amount of potential for incremental re-rates as we go, and starting here in the next, what we think is the next few weeks. And then over and above that, don't forget, we have a producing mine at Gibraltar today. I think we're going to have real good, strong production and financial results from Gibraltar in the back half of this year. So we've got that to support the news we have coming out of Florence as well. So yeah, it's a very good question. It's, we're working hard to close that, close that gap. And I think we've got enough catalysts here over the next little while for that to start to happen.
Great. I think maybe it's important to note here that one of our takeaways was that the test facility that you built at Florence, it's not like you need to scale that test facility up. Didn't you do like a full scale test on a portion of the project area? Kind of an important distinction, right?
Yeah, the test facility, look, this isn't laboratory work. This isn't bench scale. The wells we drilled to extract the solution and inject the solution, those are the exact same wells, same scale, same depth wells that will be used in commercial production, just not as many. And obviously the SXEW plant that we built was much smaller scale than what we will have in commercial production. But
right.
I think the commercial facility, really de-risked the project, both from a permitting and a technical perspective.
Right. Great. Okay. So good to note. And then also, I think another takeaway that we have is that, you have this mine life at Gibraltar, but that's really just a moving target, right? I mean, you think that would be a lot longer than, because you've had that same mine life for quite some time, haven't you?
Gibraltar's had a 20-year mine life for the last, well, as long as I've been here, and I've been here 18 years now. So it's, yeah, well, as I mentioned, there's lots of exploration potential at Gibraltar. We don't spend a lot on exploration. When you have 20 plus years ahead of you, we don't really need to add more mine life, but we do.
Right, doesn't help you.
Here, and I'm sure in the next 5 years or so, we'll be able to get that mine life back over 20 years.
Great. Okay, well, great presentation, Brian. Fantastic project, of course, or portfolio of projects. We're very bullish on copper for a number of reasons, and you outlaid a lot of those during the presentation. Today's code word for your feedback survey is Florence, the project in Arizona. Again, it's Florence, and you'll need that for your feedback report. If you have a question for Brian before we wrap up here, we've got another minute or so. If you'd like additional information on Taseko, you can get that on their website at Taseko, Taseko, mines, mines.com. A lot of information about all of their projects, financials, etc., press releases, everything you need to know or want to know about Taseko is there. The company is covered by a number of research analysts. If you're interested in getting some research, send me a note, an email, and I can get some of the most recent, kind of the more US-based research out to you. Brian, any final thoughts before we wrap up here?
Just thanks everyone for taking time out of your busy days. It's always good to tell the story to hopefully some new folks, and for those of you who've heard the story before, hopefully got a few new things. It's a very exciting time for us. We have been working very hard to move Florence along, and this final permit, which again we think is coming imminently, is such a critical step for that project and for Taseko. So yeah, we're very excited about the next little while here. So thanks again, everyone.
You bet, Brian. We have another question. I don't know if you can answer it. They wanted to know, what are the analysts' targets? They're probably different targets for different analysts. Is that something you can comment on, or can we just send out the report?
Yeah, the range is from, this is Canadian dollars. It's about 275 to 370. There's a couple with holds. There's a couple analysts that have a hold. One's a little bit below our share price, and one's quite a bit below our current. No, they're both a little bit above our current share price. Sorry, but most of them are sort of probably a 50% return to target.
Sure, and those are like what, 1 year targets or something like that?
1 year target.
12-month targets. So yeah, I mean, I think you buy Taseko for a foundational play on copper here. I don't think it's hard to imagine a world in the next 5 years where we're looking at $5, $6, or maybe even higher price per pound of copper. It'd be hard to go out and find one of these projects, go out and buy a Gibraltar for $1 or a Yellowhead for $13 million. And these projects are going to be very, very expensive when you have $5 or $6 copper. So it's good for you guys for being early and getting these projects up and running and online while copper was cheap. And that's kind of the name of the investment game. So again, thanks so much for coming on, Brian. And we'll look forward to having you on in the near future. Good luck with your permit. It looks like it could be coming here very soon. And with that, I think we'll go ahead and wrap it up.
Very good. Thanks very much, everyone. Thanks, Clay.
You bet. Thanks, Brian. Thank you, everyone, for coming on today. And we'll look forward to having you on a future presentation with Torrey Hills Capital. Until then, be safe and be well. Thanks again, Brian. We'll talk to you soon.
Bye-bye.
Bye.